In this lesson, we'll outline some of the key risks and security concerns associated with Bitcoin. If you want to use Bitcoin as a currency of payment, you must be alert of a few potential risks. Firstly, it is a highly volatile currency with huge price fluctuations. The highest price level was around $20,000 per Bitcoin at one point in time. Volatile currencies generally do not make a good currency of payment, as people want to hold on to it to speculate on the price. Secondly, as a buyer of Bitcoin, you generally have to make a bank transfer to a cryptocurrency exchange account, say Hong Kong dollars for Bitcoin, in order to buy Bitcoins from sellers. Likewise, sellers need to send Bitcoins to the exchange's Bitcoin wallets before the exchange will let them sell the Bitcoins. You are therefore exposed to exchange risks, which include hacks on the exchange or scams. Thirdly, Bitcoin is by no means a universally accepted payment currency at the moment, and it may never be. On the other hand, fiat is legal tender and one cannot legally refuse to accept, say, US dollar as payment. However, we do expect Bitcoin and other cryptocurrencies to be more widespread in the coming years. And finally, you have to deal with the impossibility to reverse payments and transactions. If you make a payment to the wrong address, there is no way to undo it. And so what about the security aspects of Bitcoin? Well, there are a variety of security risks around Bitcoin and cryptocurrencies. Firstly, phishing, which is one of the biggest and most common cryptocurrency scams worldwide. It is an attempt to obtain sensitive information from a user, such as your cryptocurrency exchange passwords, digital wallets, and private keys. Secondly, exchange security risks. There are two main types of risky activities associated with exchanges, and what you need to be careful with is the track record and trustworthiness of these exchanges. The first type of risk, which has become more commonplace, is the risk of hacks. Some people store their Bitcoins on exchanges and have had their money stolen from exchanges as a result. A second type of risk is the risk of the exchange running away with its funds under the disguise of a hack. And thirdly, storage risk. There is a real vulnerability of Bitcoin wallets when it comes to hacking attacks and theft. Using malware, hackers can intercept communication between wallets and user devices, and Bitcoin users may end up diverting their funds to a different account. So to summarize, the key risks associated with Bitcoin and other cryptocurrencies include market risk and price volatility, acceptance risk, impossibility to reverse payments and transactions, and security risks, including exchange risk, storage risk, and scams such as phishing. In the next lesson, we take a look at the arguments for whether blockchain technology is more hope or more hype.